Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Thursday, April the 29th, 2010. Well, a change of trend today with a candle with a higher high and a higher low. And yesterday we highlighted the potential for a Japanese candlestick reversal pattern. There are actually two types of patterns here. The first was the tweezers bottom, and that's where the two lows are at approximately in an equal place. And also the harami type pattern, and that's where the body of the current candle is engulfed by the body of the previous candle. So there was strong potential for a reversal, and that's exactly what happened today. Now when we talk about these reversals, that's in the first time frame, so we needed confirmation of that, and confirmation of this first time frame reversal to the upside is a candle with a higher high and a higher low, and that's exactly what we've got here. Now, just looking at the size of the body of the candle, it's quite large and it's green, and that denotes that the buyers have made some very significant net bullish progress on the day between the open and the close, and certainly much more than the previous day, because the body of the candle is probably about twice the size of the previous day's candle, and that's what you'd like to see as a first time frame trend gets started on its way. The market has also taken out this strong area of resistance at around 1200, and it is quite a bullish close, not only because of the configuration of the open and the close, but also where the market has closed with regard to the range, the high and the low. So the market has closed up towards the high, and that tells us that the buyers closed this market in control, and they showed some very strong commitment to taking this market high, and they've been in control of this market for most of the day. Just a little bit of downside pressure, as we can see the small wick on top of this candle. So quite a bullish day today. Now the market, even though it is a bullish day, it does have some decent support to actually trade through now, and there's a minor swing high here around 1213 on the way up here, but also around the 1220 region now, where the market traded to at the end of this very strong trend at this last swing high, and the market will need to trade through there. If it does trade through there, then we have the next resistance level at around 1265. There isn't a lot of resistance on the way up through there until that region, except for the 1220 area. Now the market is trading up above the cloud of the Kumo, so it has an overall positive bias, and the market is now also trading up above the Kijun-sen and the Tenkan-sen, which means that in the medium and short-term time frames, the market is bullish. Interestingly, both of these indicators have turned flat, and that's the Kijun-sen here and the Tenkan-sen, and that's reflecting not any momentum to this market in either direction, neither to the downside nor the upside. And in the medium term, it's obviously reflecting this large congestion pattern that's forming, and we did highlight previously a potential symmetrical triangle that the market successfully broke out of, but that congestion area failed. But now we have a much bigger area that's developing. So with that turning flat, it's reflecting that the strong lack of momentum, and certainly here in this case the downside selling pressure, and then the strong 2 days coming back in and almost retracing the whole candle from 2 trading days ago. Now just looking at this large pattern here, this is setting up very similar to a broadening pattern, or what some people call a megaphone pattern, and that's where we actually have at the end of a strong uptrend, we have the market making higher peaks within the pattern, but also lower troughs. And we can see here, if we call this point number 1, number 2 for a peak here, a trough here, the number 3 is a higher peak, number 4 here is a lower trough, number 5 would be another higher peak, and then that pattern would potentially complete if it trades down through the second last trough here, or this trough. That is a very strong signal if the market does trade through down there and the pattern becomes complete, but we would want to see a very solid bearish close down through there. Now the reason why that's generally a market top is because the successively higher peaks and lower troughs signifies a very large battle between the bulls and the bears in taking out those previous peaks and troughs, and it means that while the bulls are getting stronger, the bears are also getting stronger. So there's a very strong battle going on between both sides that's not resolved. And when that is finally resolved, it can be quite dramatic. And usually it's resolved as a bearish reversal because they occur at the end of a very substantial uptrend. It also marks volatility in the market. We tend to see that at market tops when markets become rather volatile. And we can see here from this very large red candle day that the volatility to the downside had increased dramatically. But also with the higher peaks and lower troughs denotes a large amount of volatility in the market. It's certainly not trending up as it was here previously over the previous few months. So if the market does come off, obviously where the market found support around this 1179 region for this tweezer's bottom will hold up as support, but there are a lot of levels all the way down, and certainly down through here to the cloud and a fair way down. As we said, to the upside though, if we break the 1220 region, 1265 will be on the way. So even though we do see this volatility coming in, it doesn't mean that the market will reverse. We do need evidence of that. Sometimes there can be more than 5 swings to these patterns, and that makes them very hard to actually predict and very hard to trade, because if we do get a 6th down and a 7th up and then an 8th breaking out to the downside, most people would have potentially taken the trade at the 5th completion of the 5th leg or the 6th down below the lows here. So it's not really a very good pattern to trade. It can be very iffy, and especially because the market can be quite volatile. But certainly one can't deny these higher peaks and lower troughs in this market at the moment is certainly you can't deny that the market is quite volatile at the moment, and the market is certainly not moving as neatly as it was previously. So we just need to be patient and wait for this market to develop. Because we are trading up above the cloud, then there is potential for the market to break out to the upside, and that's the greater probability at the moment.